Good afternoon, traders. Good afternoon, and welcome to Paul's Monday Market Update number 211 for Monday, 19th of January, 2026. I hope you're all well. Hope you have enjoyed a good start to the year and this rather eventful start to 2026. It's been quite some kickoff already, hasn't it? For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 25, 30 minutes, looking at strength and weakness within the FX indices and commodities markets, followed by a look at the charts of interest, and then a look at the live market. It is not a signal service. It's not trade recommendations. It is just me sharing with you what might be of relevance or use to yourself in your own endeavors. As always, you are very welcome here, but just remember that you are always responsible for your own trading and investment decisions. If you want some more education this afternoon, I'll be doing the Active Trades Monday Market Matters webinar at 2 o'clock London time. The educational element will be on identifying, entering, and managing a trade. If that would be of use to you, then you can basically sign up on the Active Trades website or use that QR code, and that will take you there. And for those of you who perhaps want a little bit more help or a little bit more insight and mentorship, there'll be a small group mentorship running starting next week, basically focused on trading FX and the swing positions. That'll be called the Dollar Edge, all right, which is probably quite apt based upon how the world is going at this particular moment. But it will basically run for Q1 of 2026, so it's going to be kind of 8 to 10 weeks, just basically looking at trading fewer higher quality setups from the 4 hour charts, focusing on the dollar, sterling, and euro markets. If you've got a question, just ping me a question. You can email me there, or there's a bit code, or that QR code will take you there. Okay, all right. Let's look at the main thrust of our session today. So these is some clips from the STAM. I appreciate if you're new to join us or new to trading, this might maybe look a little bit intimidating or overwhelming, but it's not really once you get to understand it. It's just, as I say, some clips that I take out of my own analysis that I do every weekend, looking to identify where's the strength, where's the weakness within FX markets. So what is this telling us? How can we utilize it? Well, we are into week 4 of the year already, 19th of January. Where's the strength and or where's the weakness? Well, we remain at this moment with Aussie dollar as at top of the pile, with sterling still ticked in and kind of in second place, even despite of the kind of, let's say, the events over the last few days. And we'll look at that more in a moment. On the flip side, what we still have is Kiwi dollar and Japanese yen, okay, kind of holding up the bottom. Now, not only do we have a fair amount going on in terms of the sort of issues with Trump and tariffs and Greenland, and we've got a pretty heavy week of data coming out. Okay, so especially for the UK as well. Okay, so we've got quite a bit of UK data coming out. So we've got kind of jobs numbers tomorrow. Then we've got CPI data on Wednesday, and then I think what we've also got is we've got retail sales on Friday. So a full-on week that sense, all right. But also we are expecting Bank of Japan having their policy meeting at the end of this week. At this moment, people aren't expecting an interest rate hike from the Japanese, although everybody is wondering when it's likely to happen, looking at what's going on in the Bank of Japan, Japanese government bonds market. Okay, so Japanese yen has remained at the bottom of the pile for a while, but it will be interesting to know whether that actually particularly continues. When we look at dollar sort of weakened there, okay, at the end of last week. And if we look at how markets, okay, have started this week, we can see there that pretty much everything's up against the dollar. Perhaps not a surprise compared to what we saw go on over the weekend with Trump putting on tariffs against European countries. Um, and then also the fact we've got Martin Luther King Day in the US today, so it's a markets are closed, okay, including like kind of bond markets. So we'll have to wait till tomorrow to see what the US reaction is. That okay? Certainly we see it in a little bit in the electronic markets, but I think the major reaction will come tomorrow, and that's what I think people will be fascinated to see how that particularly plays out. Not unsurprisingly, okay, Swiss franc remains in third place, and was today kind of doing okay out of that. All right, no surprise, little probably a bit safe haven plays on that, and we'll see how that develops as the week goes on. Certainly, when I was looking at the kind of the individual currencies that I kind of look to focus on, there's still a lot of a kind of Aussie pairs in what I call Stan One Bravo. Okay, they're in sort of still solid buying, and most of sterling, okay, is still in kind of buying as well. When I look at indices and commodities, well, in the way that they say it's always darkest before the dawn, maybe they always say it's maybe we could have another version of it, which is everyone's mostly giddy and green until it rolls over. And because if you look at that chart, look at it's pretty much all green, isn't it? And it's all pretty much all in sort of strategic buying environment. Stan One Bravo, and even oil, okay, is in a Stam 2 Bravo, okay, tactical buys as is Bitcoin, although the price action of that has been kind of interesting this week as well. So it's interesting that there's as I said, huge swathes of green there in kind of indices and commodities, and as I said, maybe it's people are at their most giddiest before it rolls. Certainly, I think the events this week will have an impact. We'll see how Europe will reply. We've got to the kind of the all the effete mincers are at the WEF at Davos this week. Okay, so invariably there'll be all sorts of grandstanding and showboating going on there, and everybody sort of tucking in. And as always, I'm kind of always curious to see actually who are the people there, right? They're kind of giving away who they actually work for, and that's a kind of a deeper insight into things. But my understanding is Trump was supposed to be there. I think he will be going there, and it'll be kind of intriguing to see how that plays out with the background of all of this Greenland shenanigans that are going on at the moment. Okay, so that's that. There's a little bit of look in there, okay, in terms of what's going on. Let's switch across to the charts of interest. Just bear with me for a moment. We'll switch across, have a look at a few charts of interest. There's quite a few today, and then we'll look at the live market. So just bear with me for a moment. Okay, so here we are, charts of interest. First one, Raytheon RTX. Okay, RTX Corporation. Okay, pretty much aerospace and defense spending made up of, I think it's like Collins Aerospace, Pratt& and Whitney, the engine maker, but also Raytheon making rockets. And it's probably fair to say that we look at this weekly chart, okay, of RTX, and the prices continue to. The price has launched itself higher like one of its Patriot missiles. Basically, if you want any kind of missiles out of the US, you're pretty much buying them from Raytheon, all right? So, Patriot, Patriots, Sidewinders, AMRAAMs, the full shebang. All right, okay, that's where they come. And I've done a few pieces on these guys in the past. They have let's say played both side of the game and have managed to get away with it and done well. And that hasn't stopped the share price, clattering its way higher. If we look back here, okay, where we were sort of October 23, 18 months ago, maybe sorry, 2 years or so ago, from where we were down here at $70. Well, last week, we closed above $200. That's quite some move, isn't it? So that is quite some move. And of course, now we have to see it's rallying it up there. Can it actually hold above $200? I'm always curious when price starts pulling away from the big moving averages, the 20 to 50 to 200, and price starts going vertical, going parabolic. That's great if you're in it, but I'm also wondered like how long can that be truly sustained? So yeah, RTX, watch that. Let's see how it does at $200. Does it top out there, or can it actually basically hold there and continue higher? And a lot of that I think will come out of the back of the of what goes on in terms of this week with Greenland, Trump, and Europe, right? So it might well be that, of course, Europe needs to rearm, but they're not going to buy American? They're not going to. Well, they might not even be allowed to buy American weapons, So it could all be a bit strained and a bit tense this week. So next, this is AM on the European markets. Okay, Dassault Aviation, another aerospace defence company. Okay, I'm curious of this because it just shows you what we've been going on here. So once again, all right, European defence company had done well over the last few years. Okay, grinding its way high. Maybe not as nice as some of the others, but we launched ourselves much higher. Okay, here just over a year ago, everyone was excited about it. Until basically what started to happen was A, there were peace talks with Ukraine, and B, there was the incident between the sort of small, let's call it, conflict between India and Pakistan, where Pakistan were led to have sort of shot down quite a few Indian Rafales, which basically sort of took the wind out of the sails of India in terms of not in terms of Dassault, in terms of sales of Rafale, and hence why we saw the price drifting its way down after there. Okay, and back into this sort of kind of gap area here. We've kind of filled it here, but the price action really had a big jump up. But what we can see is here is that actually even Dassault, who maybe were a little bit shunned a little bit out of love, the kind of continuing sort of saga, the continued saga of A, of Ukraine, and B, kind of European redefense, rearmament, has kind of managed to lift us there. You'll see on a few of the other charts, I'm going to cover a fair few of them. We were at a kind of a decision point here at the sort of end of last year, around about the weekly 50, and we can see, bang, how that's affected how markets have reacted. We've jumped from 260 euros to basically north of 320 euros, 326 euros. That's a big jump. Okay, and along with that, I think the Indians have decided to buy more Rafales. So I think, but please correct me if I'm wrong on that, but that's just an indication that such is the sentiment at the moment. Every defence company's doing well. Okay, another one who's been doing well and who has got earnings this week. Okay, we're into earnings season. GE Aerospace, they're on Thursday before the open. We just looked at quite a scruffy chart in terms of Dassault. I think it's probably harder to say that about GE Aerospace. That has been pretty much a great run there, hasn't it? It's a pure play, aerospace focus, all right, and also it's under sort of commercial aviation is pretty much where it is. So as commercial aviation has done well, that has basically underpinned their move there. Okay, so. As you can see, that continues to be in a nice trend. I think we might have looked at it a few months ago when it was pivoting around $300 there. You can see there, and you were wondering, was it topping out? But once again, 20-period moving average price came into it, putting in this big bullish engulfing candle there, okay, in December, and it has continued there, and that just remains strong, okay, that remains strong there. So, yeah, we could see if geopolitical events have an impact, but really that has continued to be a great trend, okay, and a great over the last few years playing the kind of aerospace and defence sector as it has done well for us. More on this play then. This is NOC, a weekly chart of NOC, okay, Northrop Grumman Corporation. So for those of us of a certain vintage like me, all right, Grumman is always going to be associated with kind of F-14 Tomcats, all right, or Hellcats, Wildcats from the Second World War. But they merged with Northrop Grumman, so Northrop, built the B-2 stealth bomber, and what we can see here is Northrop Grumman, has led an interesting life, shall we say? But of course, what we're interested in is that we've had this real big, strong kind of a push here over the last month or so, and that's because Northrop Grumman they're exposed to strategic US programs, so things like stealth, like missiles, like space. So that's going to give them a bit of long-term stability in their kind of revenue, and and they're sort of less leveraged to sort of, let's say, short-term rearmament spending than their peers. Okay, the kind of couple of reasons of interest is one, for years, and when last we looked at it, I'd said we were in a kind of a range between $420 and $520. Hopefully you can see that there. Okay, we're in a range. We also had a bit of the monger Okay, so nice bounces off the sort of 200 period, weekly 200 period moving average. We broke out of that 520 range, came up to 600, big round number, came back down, and we turned basically resistance into support, and we bounced off it, and we've just larruped our way up there higher. Even I wasn't expecting us to thump higher as we have done. That has been really quite some significant move, and as I said, it's just showing you here what's going on in the aerospace and defence sector. More of the same, I'm afraid, today, ladies and gentlemen. So, LDO, Leonardo. All right, okay. So, for some of us, once again, of a certain Cold War vintage, there'll always be kind of Westland helicopters, but Leonardo, Italian company, but European, basically. Defense company in particular, they do work in electronics, but they're kind of aligned with helicopters, all right? And every military wants some helicopters at the moment, all right? So once again, has been a great move, right? A great run up there, okay, based off the Ukraine issues, all right? We looked at this about how we were pivoting around €50, and had we put in a double top here, and this is what I was saying earlier. You look, quite a few of these defense companies, sort of November, December of last time, they sort of fell away to this 50 period moving average. And I was saying at the time, we had like a neckline here at 45. And I was curious to say, listen, if there is if there's a breakthrough in the kind of peace talks between Russia and Ukraine, I see all of these defense companies clattering their way through that. There was no real peace pact, and in fact, what we've got is pretty much the other way, with the sort of events in Venezuela, events in Iran, and of course now events in Greenland, and that has just given us a pump from Leonardo from €45 up to €60. That's just quite some move, isn't it? Quite some move. And once again, all of the kind of the sentiment at the moment is helping defense companies on both sides of the Atlantic fill their boots. Yep, and another one, SAAB. All right, SAAB. So of course, Cold War vintage guy here. You can clearly get my age group. All right, most of us will associate SAAB with either really nice cars or the Viggen fighter jet. All right, but once again, SAAB have done really fantastically well. And once again, remember I was saying that price was kind of pulling back the sort of the kind of Q4 for the best part of Q4 of last year. We were kind of pulling back, and everybody was thinking that there might be a peace plan, or a peace outcome in the Ukraine. That has clearly gone by the by, and what we can see is all of that kind of European rearmament sentiment has just ploughed its way into European defence companies there, and it's absolutely kind of thrown its way higher, right? So you've got basically not only the Europeans, but then in particular the Nordic countries, all right, and SAAB, that they are tucked into everything in terms of land systems, radars, air defence, airborne early warning. Okay, they've got the things in lots of pies. And invariably, they are doing well out of the back of this. And even today, they're up, I think, what's that, about 4%, isn't it? So there we go. All right, no more defense companies, but we do have United Airlines. They themselves they've got their earnings tomorrow after close. We look at the airlines, all right, and there has been some real big swings here, hasn't it? This is the weekly chart, and there's been some fantastic swings going on. And once again, we'd kind of swung from $40 up to just above north of 100, then back down to sort of just above 50, back up to 100. And then once again, kind of last quarter, we were sort of drifting our way back down, and we were talking about, was this really just a really big wide double top here at 100, and were we going to drift our way back down towards the 200? Well, once again, we can see the kind of 50 really held that. We really bounced off that 50, got back up above the 20, back up above 100, and have continued to work our way higher up to here, just under tickling the soft underbelly of $120. That's quite some move there. Now, of course, with all of this, let's say this Greenland sentiment, Iran sentiment, that does have an impact, okay, on airlines. People start to sort of get a little bit reluctant to fly, and so I'll be intrigued to see, when their results come out tomorrow. Do those results kind of push us back up to 120, or does sentiment generally sort of drift us back to 100? Okay, so I'll be intrigued to see how these play out, sort of, this week, to see where that takes us. And then finally, also with their earnings tomorrow after news or after the close rather is Netflix. We looked at these, okay, about 6 months ago, maybe not 6 months, 3 to 6 months ago. Listen, you know, that's a great trend, isn't it? That's a great weekly trend. That's what I try and tell people is, it's your job just to find a nice weekly trend and capture a piece of it, okay? Capture a piece of it, okay? That's what we're looking. Don't, when markets are in, when an instrument is in a nice trend, okay, don't fight it. Find a way to surf it, okay? But we talked about it a while about how, it just accelerates its way through 100 up to 135. And once again, going parabolic, pulling away from the 20 and the 50. Once it starts to do that, I'm always kind of concerned about what happens. What we then saw is, we kind of drifted lower and then we put in a very it's not the nicest, the prettiest, but a kind of a very small head and shoulders pattern. And what I was intrigued was that we start to flip the 20. We had the PO20 there, the 20, which had provided great support on the way up, and suddenly flipped from being support to being resistance, and then we invariably kind of fell our way down in their last earnings. And I thought we'd drift to 100 and then make a sort of a bigger bounce back up to here to around about 110. That's what I was looking for. But actually, no, we continue. All right, we've continued lower there, right, and we're south of $90 now. So naturally, people will be interested to see, can the numbers tomorrow, can those numbers hold that decline? Because what you can see there is that over that last 6 months or so, we've gone from effectively 135 to $90. That's a $45 slip. That's a pretty move. That's a pretty strong downtrend. And whilst the candles are now getting smaller, okay, which does tell us that maybe we're running out of the joy with that. As I said, the numbers will be intriguing to see, where that takes us. So, once again, this will be one to watch this week to see how that particularly plays out. Right, there you go. Some charts of interest, quite a few this week, but that's because of A, earnings, and B, what's going on in the defence world. But let's switch across to the live markets now and see what's going on. So once again, just bear with us, and we'll just switch across to the charts. Let's bring up these boys. Boom. Here we go. So what have I got? Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, oil on the weekly, DAX, Nikkei, and FTSE. All right, so indexes. Look at where the electronic contracts are opening up from last week. Okay, bit of a hanging man almost. Nasdaq, which we talked about last week, whereas Dow had been pushing higher, as had S&P to 7,000. You can see for yourself, okay, where we've opened. Even the Russell, which is has just powered its way higher, that has basically opened. Now, of course, remember the exchanges are closed today. They will basically reopen tomorrow. So I'll be intrigued to see whether these electronic contracts can fill that gap this afternoon, or whether we just basically trickle our way sideways until the markets reopen tomorrow. Okay, but certainly as we spoke about last week, Dow, S&P, Russell, we'd had some great runs, but the sort of Nasdaq. The Nasdaq was kind of going sideways, sort of coiling up, and yeah, we were waiting to see, whether the kind of tech earnings later on, whether that's enough to basically lift Nasdaq, or whether this is just an indication of that rotation that's going on out of tech into other, let's say, mainstream names, for want of a better word. With all this stuff going on, how has it affected elsewhere? Well, DAX, we talked about it, bounced off the 50, pushed those highs, but last week, okay, we closed, a little bit of a reversal pin bar now. One candle doesn't make a reversal, or in the same way, one swallow doesn't make a summer. But certainly, you can see that basically we've gapped our way down there. Okay, certainly today you can see that's what's happened. That shouldn't really be a shock. There's the hourly chart. We kind of gapped down. It's going sideways. Everybody's scratching their head, working out, what do we do here? Well, what's the story? And I suspect that will continue this afternoon and into tomorrow. And then as we start to see all the happy clappy crowd at Davos start to sort of turn up and show off their turkey teeth and their world views, then maybe that will give us some sort of kind of move to as I say, to kind of fill these gaps. Certainly a little bit at home there, UK. FTSE has broken 10,000 and continues to rally its way higher. Not unsurprisingly, Mr. Starmer and Miss Reeves have been very quick to sort of claim the sort of the benefit of that, or rather sort of claim the victory from that, not realizing that kind of FTSE 100, I think something like 75% of their revenues are in dollars these days and stuff, and so weakening of the US dollar and weakening of sterling actually basically benefits. All right, so it's got nothing to do with any kind of political move or economics of the UK. That is just, and once again, that's just a trend, and that just continues. You don't fight it, regardless of what your views about the UK might be. When you're in a good trend like that, you don't fight it. You find ways to surf it. And certainly, buying off the 50 has been great for me the last couple of months. Not unsurprisingly, gap down. In fact, I had a short intraday trade, a beautiful short intraday trade this morning. Okay, off the gap down, we gapped down, pulled back up to the 50, and then fell down again. It was just so happened that the 30 and the sort of 15 were here up at the 200 and stuff, and that was just gapping that down. Once we tried to fill the gap, failed it, we dropped down. So that was the kind of the one of the nice intraday trades this morning from working it out. Let's have a quick look at the kind of some of the commodities. Not surprised. All right, gold continued to push higher. All that kind of uncertainty, all of the kind of the sort of clattering of the kind of war talk basically is good for gold, isn't it? Look at that. Just continues to work its way higher there. Look at that 4-hour chart gapped up and has continued. Okay, and as I said, now we'll probably go sideways until we find out what the score is. All right, once we start to get the Davos crowd chatting away. Same with silver. I mean, silver, just continues. Bang! Look at that. Above 90, holding above 90. And look at that, still wicks to the downside and pushing highs. There is still demand here, okay? And the thing is, the interesting thing is that once you start getting into this 93, 94, 95, everybody just mentally switches across to like $100. That's what everybody, it's just a mental thing. It becomes like a magnet, okay? Everybody starts to look at that. As you can see from last week, there was an awful lot of volatility there at the end of last week, but still, there's still support there. Look at those wicks. That's still showing us buying support, gapping up and continue up to those highs. There is still buying support there. So keep an eye on that. And then Bitcoin, before we switch across to the dollar. I talked about this a couple of weeks ago about how we had kind of basically great sell-off going sideways, and then we were starting to go STAM to Bravo. We were just looking at us working our way up, and I thought maybe 100,000. Okay, once again, it's that big round number that starts to sort of be a magnet where the 50 and the 20 are. It starts to be a magnet on the move. We were on the daily chart, we actually start to work this really nicely, come back here, bounce up to the 50, but then you can see, basically we started this week. That's just a risk off. I think that's just a risk off move there from across the board. I know people are talking about an old whale sort of selling off and stuff, but I suspect there's also kind of just a little bit of a indecision over risk with that. All right, so what we will do, I'll look at dollar and we'll look at sterling, okay? Because I appreciate we went through quite a lot of charts of interest, all right, and things are going to change quite considerably. So here's a dollar profile: Aussie dollar, Kiwi dollar, Euro dollar, dollar CAD, cable, dollar yen, dollar Swiss, and of course dollar index. Let's go to the dollar index, shall we? So let's get that up onto the weekly chart. We had looked at starting the year, we were kind of working our way up to the 50 on the weekly chart. I thought we were getting squeezed between the 50 and the 20. Excuse me. Go down to the daily. I wouldn't exactly say it's the prettiest of price action, but it was just grinding its way up there and now pivoting around the 50. We've kind of course have weakened into the start of this week, all right? That dollar has weakened there, okay? Now, as I said, you've got the events of last week, the events of the weekend, the public holiday in the US today. So no surprise there. I wonder whether we've got the 50 coming up here, the 20 starting to turn, whether just even for the next 24 hours, we just start to basically go sideways, all right, until those American markets reopen tomorrow and we get a real view. And of course, naturally, I'm sure Trump will be out making comments as well, and that might have an impact as well, okay, on the European side in terms of trading against the dollar. Certainly, if we look at it against the euro, I had talked about how I thought, I thought we would drift down to about 115. I thought 115 would be the neckline. This is the weekly chart of the euro. I thought it'd be the kind of neckline for and head and shoulders pattern there. Okay, come down into there, when the 50, and then if we got a little bit of a kind of rejection candle, that's the way I'd look at it. Now, of course, that was my plan, my scenario, but invariably, we live in a world of Trump. What he says goes, and that can change. But at the moment, even though today we gapped down and we've had a bit of a bump up, I'll be intrigued to see can that actually hold. That has been quite some euro sell off from the double top here in the middle of last year, middle of last month. We've had quite some sell off. Could it rally its way up into the 250 area and then sort of roll over? If it does, well, that's just euro weakness, dollar strength. For me, it needs to get above the 200 and the 50 and the 20 and hold to give me an indication that there is some real genuine euro strength and dollar weakness in there. So I'll be watching this week to sort of take it as a sentiment between basically the two blocks of Europe and the US. Who else benefited really well from this was Kiwi. Kiwi dollar was the strongest currency this morning. Okay, so I can only presume that is because New Zealand is a long way from America, Greenland, Europe, and Iran. So I'm being a bit facetious there, but it's as good a narrative as any other. But we can see that basically that they've done well out of this kind of the knee jerk, and you can see for yourself, all right, that basically dollar starts the week on the back foot, all right, and the question will be, does that stay like that? Okay, do we start to get sort of lots of grandstanding from European politicians about acting strong and stuff, and whether that is enough to basically get people to sort of switch from the US to Europe? We will see. All right, I have my own views, but we will see. And then let's finish off with sterling. All right, so this is sterling profile. So I've got cable, pound yen, euro sterling, pound Swiss, pound Aussie, pound Kiwi, pound Canadian, and the FTSE. All right, we looked at FTSE before cable. We got the dollar. We were drifting down, right? But dollar strength and a lot of sterling weakness. But of course, and last Friday's was like a nice inside bar, pin bar. So, before the news, I'd have been ready, probably drifting this down into the 50. But you can see what's happened, all right, today. That is basically, we've gapped down on the open, and then we've just basically, that's just been dollar weakness, that really. Dollar weakness, you can see there, if we go to the hourly chart. Yeah, so, it basically, we gapped down. This is a 30-minute chart. We gapped down, we filled it, and then really the European session today, not massive, not massively exciting, certainly for kind of sterling. And I just look at that as, we're squeezed here between the 200 and the 50. So you've got all the dollar elements. And then, as I said, we've also got a week full of sterling relevant news. Okay, jobs news tomorrow, CPI on Wednesday, and retail sales on Friday. We've also got STAM and Reeves sort of trying to be in Davos, as along with Mr. Kyle, and they're also wanting to make announcements and stuff. I'm not entirely sure what kind of announcements they're going to make that are going to put the fear of God into the Americans. My own view is, I suspect, is that Starmer will use this as a stealthy way to sort of take us back into Europe full time and sign us up. That's what I suspect. But there you go. Maybe I'm just being a bit of an old cynical duffer there. If we look at a couple of the others, well, pound against yen. All right, we had put this last week was great swing trading on the pound against the yen. We it literally started pushed up, and then we fell our way down. Okay, from that, as I said, 4-hour charts. We really pushed up, put in a really lovely double top, and then came our way down, and then once again we gapped, and then we rallied, which I was surprised because I thought we'd see more on the yen side, okay, in terms of that sort of risk off move. But then I think everybody is scratching their head about Japanese yen anyway. All right, everybody's sort of kind of not really sure what to make of the Japanese yen at the moment. So perhaps that probably is a sign of that. Certainly, when I looked at pound against Swiss franc, which we talked about, this is a daily chart. A lot of sterling green there, isn't it? All right, and we hit the 200, and then you can see, bang, that invariably that's kind of that Swiss strength. That safe haven play there. Gapped down, hit the 200, and really, once again, having gapped down, okay, and tried to fill. It's not been a terribly exciting European session. All right, you've got, as I said, the American public holiday. Anybody is probably enjoying themselves in Davos, all right, and yeah, and waiting for sterling news this week and stuff. So it's just kind of, for me, I see that that's just coiled, all right, that's just coiled. If you look at euro against sterling, that has just been in one big channel, hasn't it? That's the daily chart, one big bearish channel, going a bit sideways really this month. Okay, not really sure what to make of it. And 4 hour chart. Whereas the 4 hour chart, we had a really lovely swing here a couple of weeks ago. You can tell everybody's getting ready to party at Davos, aren't they? The Europeans and the UK, they're not really sure what to do. They literally sent one British soldier to Greenland over the weekend just so that Starmer could say that he had done something, and that basically he was aligned with his European buddies. But sent one British soldier to Greenland. That'll put the fear of God into people. All right. So and that's why we're just seeing. Look at that. It's just intertwined. All right. Let's wait for kind of um, Trump's next comments and for sterling news to see what basically comes out of that. All right, and whether we get a catalyst for the next move in the sterling. All right, there you go, ladies and gentlemen. We've kind of overrun a little bit. I do apologise, but there's lots to talk about. All right, I appreciate that. I do fly through this. It's just because I'm trying to share as much as I possibly can in the next, in this sort of 25, 30 minutes time. I hope you found that useful. I hope you found that helpful and beneficial to you. As always, I wish you the best of success in your own trading endeavours, ladies and gentlemen. Have a fantastic trading week, and I look forward to speaking to you soon. Take care, everybody. Cheers.